Hey everyone, Larry Bailey here with Mortgage Workflow Partners, bringing you another weekly update for what's going on in the market. Today is October 7th, 2024. We're going to go through the events of September 30th, 2024. And what happened mostly was job growth, right? Job growth in September was stronger than expected, while the unemployment rate ticked lower. Here's what we're going to talk about today. Number one, big upside, jobs surprise. Second one is private sector job growth rebounds, wages moderate. The next story is upticks in August job openings are not the whole story. Next one is the gig economy impacting jobless claims? And the last story we'll talk about today is annual home price growth is still strong. So on screen here, we're going to go through this live on recording. And if you are listening on podcasts, thank you very much. But head over to our YouTube channel using Mastering Encompass, or head over to mortgage.community and you can check it out there also. Either way, it's up to you. First story is all about big upside job surprise. So we see this chart on here from the BLS, that's the Bureau of Labor Statistics, and we can see this trend line kind of going up and then falling flat, and it's slowly going down a little bit. And the Bureau of Labor Statistics, which is the BLS, that reported that there were 254,000 jobs created in September, which was well above estimates of 140,000, tremendously above. Positive reactions, positive revisions in July and August also added another 72,000 jobs with those months combined. The unemployment rate fell from 4.2 to 4.1%. And what's important here is making sure that you understand that the report had a different tone than the softer labor sector data we've been seeing in recent months, as it showed strengths on multiple fronts. In addition, the overall job growth, the number of full-time workers, that rose by 414,000 after declining in August. Average hourly earnings came in also above estimates. Note that September's headline growth figure will be subject to revisions. Of course, it's what happens over the next two reports. So we'll have to see if the data that we just got remains as strong as it initially seems. We'll see. We'll see what happens. And of course, all of this is on the heels of the 50 basis point cut in the Fed funds rate to prevent a recession, because we were worried about jobs. And then we get this report. So crazy enough, mortgage interest rates have actually gotten a little bit worse than when just before this report came out, because the likelihood of more federal Fed funds rate reductions is still going to happen, but how much it will happen, we'll have to wait and see. We'll see about that. This next story is all about private sector job growth rebounding, wages moderate. We see from ADP, the report that came out for September 2024, the monthly change in U.S. private employment. You can see this trend line go down, 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 and pops in September. And so September's private sector job growth rebounded after a 5-month slowdown per ADP's employment report, which showed that the employers added a higher than expected 143,000 new jobs. In addition, the breadth of job creations was better in September than in August, which had more sectors shedding jobs. However, it's important to note that small businesses continue to struggle, as those with fewer than 50 employees lost 8,000 jobs. And you want to compare this against 150,000 new jobs added among medium and large companies combined. I can tell you this as a small business owner, it's tough. It's extraordinarily tough, and you have a lot of restrictions and limitations on capital. And so what ends up happening is you lose people, or people get nervous. Employees get nervous and they want to leave and go to what is perceived to be a safer position with a larger company. It's not always the case, though. So the bottom line for this story is the big story in the report was wages, 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 with annual pay gains continuing to decelerate for both job stayers. That's a plus 0.4%, 4.7% from 4.8% the month before, and job changers a plus 6.6% from the 7.3% from the prior report, reflecting a decline in wage pressure inflation. Neela Richardson, the chief economist for ADP, noted that, quote, stronger hiring didn't require stronger pay growth from last month. Typically, workers who change jobs see faster pay growth, but that premium over job stayers shrank to 1.9%. Not that much, really, matching a low we last saw in January of this year. So let's get on to the next story. This one's all about the uptick in August job openings. Wasn't the whole story. So the latest job openings and labor turnover survey, that's the JOLTS, in case you hear that acronym thrown around, showed that job openings rose from 7.7 million in July to 8 million in August. This was actually all over the news if you were watching job news. The hiring rate fell to 3.3%, which is the lowest level since 2013, not including COVID, of course. The quit rate also fell to 1.9%, suggesting there is less poaching from other companies and fewer people feel confident about finding new employment. Bottom line in this story, of course, is while the increase in job openings was unexpected and above estimates, the total, may be weaker than the headline suggests. The rise in remote work has led to job listings being posted in multiple states more frequently. We saw a lot of this in COVID. We saw a lot of this in COVID because employers will try to find people anywhere. Plus, the low hiring and quit rates do suggest that some labor sector softness, which was also reflected in the latest job cuts report from Challenger, Gray, and Christmas. Hiring announcements fell to their lowest year-to-date level since 2011. So, put all that in the mixer and what you got, we're going to have to wait and see. Again, it's all about the trend lines here. So, next story is gig economy impacting jobless claims? Initial jobless claims rose by 6,000 in the latest week, with 225,000 people filing for unemployment benefits for the first time. Continuing claims were basically flat, rising by 1,000 as 1.826 million people are still receiving benefits after filing their initial claim. Bottom line in this story is initial jobless claims remain subdued, which could be due in part to the gig economy. So we think. Some people who are let go from their jobs are choosing to work for companies like Uber instead of filing for unemployment benefits. In addition, many layoffs have occurred in the technology sector, where employees tend to receive generous severance packages, thereby delaying some filings for unemployment. I actually know one of these folks. Yeah, and she's like traveling the world right now. She's paid in full. She got laid off in June. She's paid in full through the end of the year. Must be nice, right? Meanwhile, continuing claims are still at elevated levels, topping 1.8 million for 17 straight weeks and remaining near 3-year highs. Generally, companies tend to stop hiring, which of course keeps people on benefits for longer before they start firing, which keeps first-time filers tame. This also explains some of the dynamics in the data that we see. All right, let's get into some home stuff here. Annual home price growth is still strong. CoreLogic came out with its home price index, and it showed that home prices nationwide fell 0.1% in August, though prices were 3.9% higher when compared to August of last year. CoreLogic forecasts that home prices will rise 0.1% in September and 2.3% in the year going forward, though their forecasts tend to be conservative. Bottom line in this story is all about CoreLogic's appreciation data. That's shown to be weaker than Case-Shiller's, which is considered the gold standard in tracking changes in residential home real estate values. Case-Shiller's latest report showed that home values nationwide were 5% higher in July than a year earlier, while the Federal Housing Finance Agency also reports a 4.5% annual growth over that same period. These reports show that homeownership continues to provide significant wealth creation opportunity. We'll see. So if you're into apples, I don't know. I'm an apple guy. I know a lot of people are apple guys. My wife makes a mean apple pie, but this one's all about easy apple cake. This one's courtesy of All Recipes, serves 12. You can check out if you go over to the YouTube channel if you see it there, or if you get over into mortgage.community, check it out about now in the audio, and you'll see it on the video there. You can see the recipe on screen. Let me know if you make it. Let me know how it turns out. Here's what we're looking for the rest of this week. We've got crucial inflation data that's going to be delivered on Thursday via September's Consumer Price Index. The Producer Price Index, which measures wholesale inflation, that follows on Friday this week. The latest jobless claims will also be reported on Thursday. Listen, important auctions are ahead, including the 10-year note on Wednesday and the 30-year bond on Thursday. Plus, the minutes from the Fed's latest meeting will be released on Wednesday, which, of course, everybody's going to comb through. We'll also hear from several Fed members throughout the week. And that's what you got going on. My name's Larry Bailey. Please go ahead and like this video, subscribe. We'll always bring you new content. Thanks very much. We'll see you on the next one. Take care.